Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I tell.
All right. Hey guys, my name is Mark Eitel, and you are tuned into the Mr. Mortgage Show. And friends, sit back, relax, grab your phone, grab your computer, be ready to text or email. Man, we have a great show lined up for you this week. We are going to encourage your participation, but guys, you're in the right place if you want the data, the answers to your questions, the tips, the tricks, the strategies, all the info that you need so you can make sense of this crazy real estate and mortgage world that we're in right now and go out and make better decisions for you and your family. Again, my name is Mark Eitel. This is the Mr. Mortgage Show, where we always encourage your questions or comments. Just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. And Jen, my producer, is standing by, womanning the hotline. She'll get your questions on the air. Guys, if you prefer to shoot us an email, just head on over to mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page, click that email icon, and you can shoot your questions over there as well. And guys, there's a lot of great info on mrmortgageradio.com. We are going to cover some of it today. But hey, before we dive in, I want to share an interesting, well, I find it interesting, hopefully you will as well, story about perspective. Because I think right now, there is so much confusing and negative news flying at us every day about politics, the economy, housing prices, interest rates, the recession, yes or no. It's nuts, and people don't know whether to scream or eat a banana. It's just crazy out there. So I want to share something that happened to me last weekend. You know, some of you know that we broadcast the show from our studios here in Martin County, Florida. And we get afternoon rainstorms this time of year. Some of them are violent downpours. So I'm setting the story up, right? Because Mrs. Mortgage and I have agreed to do a little more exercise in our lives, and we're trying to get out and walk and ride the bicycles. We live in an awesome area with beautiful natural resources, so we're kind of thinking, hey, let's get out. Plus, there's an awesome ice cream shop not far from our house, so I have a tendency to ride the bicycles in that direction and lead the pack over there so we can reward ourselves with an ice cream. Hey, what the heck? We're working it off. By the time we get back to the house, hopefully we're net even with the calorie intake. But here's the story I want to share. We were out riding, and you could kind of tell that the rainstorms were in the air, but I thought we had plenty of time to have a nice ride. Well, I was wrong. We got about halfway towards our destination, and here come the clouds, and gosh, man, did it open up. It was pouring. And I was being a grumpy old man, really upset with having to ride my bicycle in the rain. And we rode past a group of kids that were having a blast. They were stomping in the puddles and chasing each other around, and they could not have been happier. Man, the rain to them was a game. They were having a blast, and it really, really made an impression on me to the point that I kind of slowed down and almost stopped for a minute watching them. And then it took me back to my childhood where a splash in the puddles or a run in the rain was a blast. I mean, where the neighborhood I grew up in, each Thanksgiving weekend, all the kids would come out, and oftentimes it was a muddy, rainy mess, and we would play football, and we called it the Turkey Leg Bowl, and we would play in the mud, and if it was raining and muddy, it was even more fun. And then I thought about all the times growing up as a Florida hillbilly, if you will, with the four-wheelers out in the mud and just having a blast. And growing up surfing in the rain and really thinking about how what we focus on, what our perception of the event is truly changes what that means to us at the moment. So what I perceived as a negative, these kids reminded me that you could have fun, and we laughed the rest of the way home. And don't get me wrong, it was cold, but we had fun. We just, we're like, heck, we're out here, it's raining, there's nothing we can do. And we just kind of raced home in the rain laughing. And I think that's what's happening in the world of real estate and the economy right now. so many people are putting their head in the sand and they're just mad and they're frustrated and they're angry because they hear interest rates are up or housing volume is down or listing inventory is down. And they're walking around with their head hung in a defeated attitude. But guys, people are still winning. And I'm not suggesting that it's the right time for everybody at any given time to buy or sell real estate, but there are instances out there where it still makes a lot of sense. And we've been working with a lot of agent partners. You guys know that I support the Really Great Agent Network, and I've been helping craft seller financed opportunities where people have a load of equity. Oftentimes their house is paid off. They want to make a move and downsize, but they don't want to sell their house, cash out all that equity, go buy a new house and have big bills associated with the new purchase. So we're looking at opportunities where they can sell their home and offer seller financing where they're holding a mortgage at often a very attractive interest rate from an income standpoint, right? Because you can get 7, 8, 9, 10% interest on a seller finance deal right now. And they're turning that equity into cash flow, because you hear me say it all the time. Equity doesn't buy groceries, cash flow does. So in some of these examples, people are taking the house they have, they're selling it, they're turning that into a cash flow instrument, an investment. They have maybe a 25% deposit that they've received from the buyer. Now they've got plenty of money to put down on the new property, and the cash flow that they're receiving from holding the note is paying for the new property. And that day in the rain kind of reminded me of that, because some people will look at this environment we're in where, and this is a staggering number, but I just posted this to the Facebook group this week, that the chief economist for Zillow said 70% of all U.S. mortgaged households have an interest rate under 4%, which blew my mind. And I haven't had a chance to research the data, but I don't have a reason to doubt it either. So if that's the case, so many people are just kind of locked into their home, not really wanting to sell. But then another statistic was 23 or 28%, and I'll post this to the Facebook group also, of U.S. households have no mortgage. Well, those are the people that opportunities like this make a lot of sense for. And the low interest people can do lease options if they're owning the property and they want to go buy something else. Lease with an option to buy their property out. They can take a big down payment and use that down payment to go buy their property. So I'm sharing that only because I found it truly enlightening when those kids were playing in the mud puddle, to remind myself that it's really not what we're looking at. It's the lens, if you will, or the mindset that we're looking at it through. Because I really think if you have a property free and clear and you want to make a move, man, what an amazing opportunity to do seller financing and turn equity into cash flow. But anyway, guys, those are the musings of Mr. Mortgage this beautiful morning. So guys, if you have any questions or comments, we're going to get you on the air as we keep the show moving. But you hear the music, you know what that means? That is my cue. We'll be back in a few. Sit tight on the other side of this very short break. We are going to be back with more of the show, and we're going to dive into your questions. So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. Sure, lowering your interest rate is one, but there's debt consolidation, home improvement, unexpected medical expenses, pulling out some equity to go buy an investment property. Heck, I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's jump back to debt consolidation for a minute. I'm working with a client right now. His name is Ben. He's going to refinance his house, pay off a host of credit cards and 2 truck payments. And yes, his mortgage interest rate is going to go up, but his monthly expenses are going to go down significantly. And that monthly savings is going to get he and his family back on track. Guys, if you've got questions, check us out at mrmortgageradio.com. That's mrmortgageradio.com. My name is Mark Eitel, NMLS 1929005. I host the Mr. Mortgage Show, and we are always here and happy to help. Check us out at mrmortgageradio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. And guys, I hope you are ready. I hope you're wound up. Man, I really appreciate you letting me rant a little bit in that opening segment, because I just think we need to stop making decisions with emotion and ego and start using data and logic, because it's much, much more beneficial in the long run. You're going to come out on top. But if you have questions and you want to get them in this week's show, just call or text 855-462-7292. That's 855-462-7292. That's the Anytime Hotline. Or head on over to MrMortgageRadio.com, scroll to the bottom of the page, click that email icon, and you can send your questions to Jen that way. But guys, I'm wound for sound. I am highly caffeinated, super excited to be with you. So let's dive right into some of these questions. Hey, Jen, throw me question number one.
Courtney sent us this. We've been helping my father financially, but things are getting tough. I'm thinking it may be time to discuss a reverse mortgage. How exactly does the repayment work with a reverse mortgage? Can we get stuck owing a bunch of money when my father dies?
Hey, wow, Jen, that was very dramatic. Did anyone else catch that, how she set that up? I think it's time to discuss a reverse mortgage. Dun, dun, dun. It sounded like a drama series on TV. Hey, great question, Courtney. No, I'm kidding. Jen's giving me the stink eye, guys. I think I'm in trouble. To answer your question, Courtney, no, you won't get stuck with a bunch of debt. Now, you will have to pay the loan off when your father passes. So it's like any other mortgage. It has to be paid at the transfer of deed. So once he passes, or if he moves into assisted living full time and he's no longer occupying the property and you sell it, that mortgage gets paid off. But if your fear is that over time, he could accumulate so much debt against the property that he's in a negative equity position, meaning he owes more than it's worth, that's not going to impact you. The reverse mortgage is part of the FHA loan portfolio, if you will, the catalog of products. So it's insured. It's a federally insured loan program, and you just slide the keys across to the bank. The bank sells the property. They incur the loss, and later they cash that insurance policy to get a portion of those proceeds back. So it does not negatively impact you if he should owe more than it's worth when you inherit the property. I hope that makes sense. And guys, a lot of people have that question. It's a non-recourse loan. You can give the keys to the bank. You have a year to settle the estate also. That's another big one. How long do we have to pay that off? What's going to happen? They give you adequate time to settle the estate because the industry knows that that's usually the end of life loan, right? That's the last loan the people are going to get. So it's set up that way intentionally to give you time to settle the estate, and then also that insurance component makes it non-recourse to you as an heir. So brilliant question. I appreciate that. And we are talking to more people about what we opened the show up with, debt consolidation loans, and then also a lot of people are leaning into the reverse mortgage because equity is all they have right now. That Social Security increase wasn't enough. And man, it's just so much more expensive to live today than it was, as recently as 3 or 4 years ago. Homeowners insurance, the groceries, the fuel, the healthcare, everything, these everyday expenses that the fixed income senior just can't avoid. The equity is usually what they have to lean on. So we're talking to more people about it. Courtney, if you need more info, reach out. I'll be happy to send you the reverse booklet. If anybody wants to request it, go to MrMortgageRadio.com and click on that more about reverse link. But I appreciate that. Hey, Jen, throw me another question.
Nikki is asking, how will refinancing my mortgage for debt consolidation affect my credit score? If we pay off all our credit cards and close the accounts, our score should go up, right?
Hey, that's a great question. They will go up, but as long as you don't close those accounts out, because length of credit is one of the criteria that are factored into scoring. So a lot of people make that mistake and they'll pay the debts off and then close the cards. And then now they don't have any old established credit lines. And then what's left on their credit is usually utilized more. So if you close out all your old credit cards and you've got one that's at, 50 or 60% utilization, meaning you've borrowed 50 or 60% of the available credit, that's also a scoring criteria. So if you've got 10 cards that have a $500 available balance, you've got $5,000 in available credit. Well, if you close 9 of them out and you owe $250 on one, now you've used 50% of $500. So length of credit is a scoring criteria, and the amount of credit utilized against availability is also a scoring criteria. And by closing out those old accounts, even if you're not using them, keep them open. So that will help your credit score immensely. Paying them off and leaving them open, yes, will increase your credit score. But brilliant question. I hope that helps. If anybody gets confused about that, just reach out. I'll be happy to walk you through it. Hey, Jen, can you throw me another question?
Randy sent us an email. This may be hard to follow, but can I buy an LLC that owns a rental property instead of buying the property? I'm thinking this will save on a big tax increase. I'll also inherit the lower interest rate. I'm trying to think outside the box.
Hey, Randy, that's a great question. You might be thinking a little too far outside the box when it comes to the tax savings component, though, because commercial property or residential rental property, so anything that's not a primary residence, the taxable value is reassessed annually. So if your thought is that you're buying a property that has a lower tax base, it's unlikely that it's going to stay that way because it gets assessed annually. And that's one of the advantages of homestead exemption on primary residences. That increase is capped. So from that standpoint, and I guess I need to back up. I'm not a tax attorney, but that's one thing I see that's flawed in this calculation. I don't know that the tax savings is going to be there to the point that you're considering it to be as a buyer. And I believe that the seller will also have a taxable event by selling the LLC. Now, you inheriting a lower interest rate, that's where it gets interesting and attractive. Assuming that the loan was closed in the name of the LLC and that the original LLC owners are not personal guarantors, then this might work. It might be a way that allows you to take over that loan that is currently on the property under the terms that it currently exists, because if XYZ LLC is the owner and the borrower and that doesn't change, then in theory this could work. But I would love to have a conversation with you and understand it in a little more detail. Because I'm missing a lot of details that I would need to have a full comprehension of this. And secondly, I am not a tax attorney. I don't play one on TV. I didn't sleep at a Motel 6 last night or whatever that motel commercial used to be. So I don't want to pretend to understand all the tax implications around it. But I do know where you're going, and I think some of it has merit. So interesting concept, and I commend you for thinking outside the box. Now, I know I didn't fully answer that question, but I would welcome the opportunity to have a deeper conversation with you about it. But hey, you hear the music, you know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this short break. We'll be back with more of the Mr. Mortgage Show.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, my name is Mark Eitel, and this is the Mr. Mortgage Show. Guys, if you have questions or comments, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. Or visit MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page. Click that email icon and you can shoot your questions over via email. Hey, but speaking of your questions, Jen has been hard at work back there, and I know I went long that last segment, so let's rip through some of your questions with a rapid round. Hey, Jen, do you have one ready?
Monica is asking, I know you're always saying good things about an FHA loan, but when I talk to real estate agents, they say I should only try to get a conventional loan. I'm not sure what the difference is and why they are pushing me in that direction. Is there a downside to FHA?
Hey, that is a brilliant question. Man, this one gets me worked up because during the pandemic, never before have I experienced this to the level that we did during the pandemic buying frenzy. And I likened it to a lot of agents just not understanding the reality of the FHA, the VA, or the USDA loan. And a lot of them are clinging to very old misconceptions. And I think the newer agents just haven't been around long enough to experience a market where, FHA is a super valuable and super powerful tool. So let me share this. As a buyer, there is absolutely no downside to an FHA loan. Absolutely not. The rate is better. By default, the interest rate on the FHA loan right now is trending lower than conventional. The underwriting guidelines are far more flexible as far as credit score or debt to income ratio, so it's easier to qualify, and it's easier to qualify for a larger loan amount. And lastly, the mortgage insurance component, which if you put less than 20% down, also exists in the conventional world, has been reduced significantly. So from a monthly payment standpoint, the FHA loan is an amazing opportunity, as is the VA loan and the USDA loan. And those three categories of borrowers really got pushed aside during the pandemic. And I don't know what the solution is to fix it. Actually, I do. I would not be opposed to a blind offer scenario where sellers did not know what your financing program or preference was. We would need to put some guardrails in place so that you were fully approved, so the seller's not putting themselves at risk of you not being able to close. But why should a matter of fact, a seller who won't accept an FHA, VA, or USDA offer is limiting themselves. And now as the market has contracted a bit and there are fewer people at 6.5% or 7% who want to go out there and buy, if I was a seller, I would be entertaining everybody's offer who was qualified. So this one gets me worked up. Most of it is because the agent might not understand and might have some misconceptions. And one of the big misconceptions about those loan products is the appraisal process. And they think it's more difficult. Well, as long as the house is in good shape, meaning no broken windows or torn screens or chipping paint or leaking roof, there's very little difference in the appraisal of a conventional or VA or USDA or FHA loan, with the exception of those safety or hazardous things that might be called out. If the handrail is missing off the stairs on a VA, that's going to be called out. But other than that, if the property's in good working order and habitable, there's almost no difference. And from the appraisal standpoint, it's the exact same calculations and the exact same comparables. So the value of a conventional appraisal versus the other ones should be the same if the same appraiser did each variation of it. So this one gets me worked up. I think you should fight for your right to FHA. I did a talk a long time ago, use the Beastie Boys soundtrack, fight for your right to VA, but it's also true with FHA and USDA. And if your agent's just completely pushing back, call me, use a different agent. I am proud to endorse the Really Great Agents Network. I'll find somebody for you and talk to them myself and make sure they totally understand the presentation process of an FHA, VA, or USDA loan. And if you have a great lender, have them call me and I'll let them know how we present the approval for a government loan borrower, because it makes a difference. So hang in there, keep making offers, and fight for your right to FHA. Absolutely, it's a brilliant loan program. Hey, Jen, toss me another one.
Terrence sent us an email. You were talking about a landlord loan a few minutes ago. Will that work if I work for myself and don't claim very much income?
Hey, Terrence. Yes, absolutely. So the landlord loan is going to look at your assets and your credit, not your income. We're looking at the income that the property produces. So as long as the incoming rent or the projected rent, if it's vacant, will cover the payments, then you're fine. But if your question is about a primary residence, because some self-employed borrowers may be thinking of like a no income verification loan for buying a primary, it's a different animal. The landlord loan is only for rental properties, but there are programs with no income verification or bank statement income verification for self-employed borrowers. So I would need a little more information just to be clear exactly what your question is. But as far as the landlord loan is concerned, that would work well because we don't even have to review your income documents. We're looking at assets and credit on your side and income from the property. So, but brilliant question. Hey, Jen, do you have another question?
Jacob sent us this voicemail. I've been listening for a while, and I think a reverse mortgage may work for us. But I'm still confused about a couple of things. What happens if we decide to move into an assisted living community in a few years? Can we sell our house? Can we still leave the house to our son?
Hey, that's a brilliant question. I'm going to encourage a call off the air because the reverse mortgage, there's so much to talk about. I'd love the opportunity to walk you through it, but just to answer the questions that you've laid out. So yes, if you need to downsize in the future or relocate, you can sell the property. There's no prepayment penalty with a reverse mortgage. You could choose to refinance it in the future for whatever reason. If you had a ton of equity or you just wanted to put a normal mortgage back on the property, yeah, not a problem. No prepayment penalty associated with a reverse mortgage. And then as far as leaving it to your children when you pass, it's the same as any other piece of real estate that has a mortgage on it. The reverse mortgage is simply a lien, and they can refinance or sell the property to satisfy the lien. Then the property will transfer to them. It's exactly the same as any other mortgaged real estate. And they've got 12 months for the estate to settle the reverse mortgage, which is, usually more than enough time. So brilliant question. And on this topic, we have seen a big upsurge in interest from the senior community around the reverse mortgage product. So if anybody has questions, guys, if you haven't heard my story, I'm not going to bore you with it, but I got involved in reverse mortgages because a dear family member of mine was considering a reverse mortgage many years ago, and I wanted to learn everything about the process before she decided yes or no. So anyway, it's a brilliant loan program. It's a great tool, but it's only a tool. Like a hammer, I say it all the time. It's not right for everybody. It's a tool, but like a hammer, you can build a house with it or you can tear a house down. It depends on how you use that tool. So you need to move forward cautiously, but also know that people have never had this much equity in their property, and there's a lot of people taking advantage of that equity to lessen the burden of that mud puddle that I referenced earlier in the show, i.e. the economy, inflation, and just the overall expenses that we're all suffering through. So anyway, I hope that helps, and I would welcome the opportunity to have a conversation with you in greater length about that, but great one. Hey guys, you hear the music, you know what that means? That is my cue. We'll be back in a few. Sit tight on the other side of this very short break. We'll be back with more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. And man, oh man, you guys have been awesome today. I swear we've got the best listeners of all time. What a great bunch of questions so far today. If you've got questions or comments and you want them on the air, just call or text 855-462-7292. That's the Anytime hotline, 855-462-7292, or visit MrMortgageRadio.com. Scroll to the bottom of the page. That's MrMortgageRadio.com. Hit that email icon on the bottom of the page, and you can shoot your questions over to Jen that way. But speaking of Jen and your questions, I am going to keep this going. I know she's got some more back there. So, Jen, throw one my way.
Henry sent us an email. Last week, toward the end of the show, you briefly mentioned using a reverse mortgage for buying a house. How exactly does this work? Seems too good to be true.
Hey, Henry, it does seem too good to be true. Man, that is another reverse mortgage question. We've had a few today. Wow, sign of the times, right? I encourage anybody out there, if you are seeking more information about reverse mortgages, just check out moreaboutreverse.com. That's moreaboutreverse.com. Or go to mrmortgageradio.com. There's a big button that says More About Reverse. And request your info booklet. We'll shoot it over. You can go through it, and at very least, you'll have a base level understanding of the program and be ready to ask some really meaningful questions. But anyway, man, this is a great question. So I'm going to answer this by sharing a story. So there's a single woman, her husband's passed, the kids are long out of the house, grandkids don't even come to visit anymore. The house is worth $500,000 and she does not have a mortgage on the property. So she wants to move into the really cool 55 plus neighborhood, the bus that takes her to the organic grocery and the green market and the pickleball courts are all right there. And she's like, wow, I'd really like to make the move, but I don't want to have a big mortgage payment. I just can't get my mind around how to make this work. So let's, for argument's sake, in this example, say she's selling a house for $500,000 and she's buying into this new senior community for $500,000 because those neighborhoods aren't as cheap as they used to be, right? So in this instance, because of her age and her equity position, she would be required to put 50% down. So she sells for $500,000. She puts $250,000 down on the new property. But more importantly, she puts $250,000 in the bank, which gives her tremendous peace of mind and the cushion that she doesn't have now. And the best part is she doesn't have a monthly mortgage payment on that $250,000 at, 7% or whatever the rate of the day is when she decides to make this move. Now, again, she has to pay the taxes, the insurance, and the association fees, but that big mortgage payment portion of it, she doesn't have to make. So that's how it works. You have to put enough money down to meet the equity requirement that you would, just like if you were doing a cash out reverse mortgage, or that's the traditional mortgage, reverse mortgage by most people's standards. You have to have enough equity in the property to make that work. It's the same in that you have to put enough money down to meet that equity requirement. But I hope that helps. That's the best example I can come up with on short notice that makes sense. And a lot of people are in that position right now. We talked about it earlier in the show. I think it's 23 or 28% of U.S. households don't have a mortgage. So if you're in that position, selling and holding a note, turning equity into cash flow like we talked about, or a reverse to purchase might make sense. But I'm sensing a tide shifting in mortgage and real estate and a lot of attention in the reverse space and in the debt consolidation space. So I encourage anybody who wants to just start the journey, check out Mr. Mortgage Radio and click on one of those appropriate links. But I appreciate the question. Hey, Jen, throw me another one.
This one is from Chris. My wife and I are first-time buyers. I'm approved for a VA loan, but our offers keep getting passed over. I could get a regular loan, but I really want to use my entitlement. It feels like we're getting discriminated against. Do you have any advice? It all just feels wrong.
Hey, Chris, it is wrong. It is wrong. Fight for your right to VA. I say it all the time. I went into depth on this earlier in the show with the FHA example, and this is the same thing. People don't understand it. There's a ton of misinformation out there, and a lot of realtors just don't understand it. They're afraid of it, so they discourage it. And man, it sounds like your agent's fighting for you. If they're not, if somebody out there feels underserved, Really Great Agents is an amazing network. Check out reallyGreatAgents.com. But anyway, I don't want to turn this into that. But what I would encourage you to do is use that ready, able, and willing presentation technique. I'm happy to walk your mortgage guy through it. Or if you don't have a mortgage guy that you're loving on, we can do it for you. I think that makes a difference. Consider getting a conventional approval and presenting both and saying, listen, I'm approved. I could do this conventionally, but I want to use my entitlement. I get 100% financing, which allows me to keep all my money at work and other investments. I get a great interest rate, and I served my country. I'm entitled to this opportunity. But Mr. Seller or Mr. or Mrs. Listing Agent, if you're afraid that I'm not qualified, here's my conventional approval, but I want to use my VA approval, and they need to know that up front because there's an addendum as part of the contract that specifies FHA and VA because there are slight differences to the contract. But by showing them that you can go either way, you might dispel some of their fears or myths. But man, I would love to talk to you in length about this one because I get worked up about it. FHA, VA, USDA buyers, you guys, you're not getting your fair opportunity, and it drives me nuts because the type of financing you use should not be a criteria for acceptance of an offer. But anyway, I hope that helps, and I greatly appreciate that question. And thank you for your service, brother. Fight for your right to use your VA because it is your entitlement. You earned that. It's not a gift. All right, I appreciate it. Jen, throw me another question.
Phil is asking, I'm selling my house without a realtor, and it's getting a lot of interest. Now, I think I priced it too low. Is it possible to get an appraisal even though it's already for sale? Also, what should I be asking buyers to know they are going to be able to follow through and close?
All right, Phil, you are speaking my language, brother. I haven't had a question like this in a long time. And this is how I got started in the business. The very first clients I served in the late 90s and early 2000s were for sale by owners because you guys are soldiers, man. Congratulations on having the courage to go out there and go to war. And I get it right now. Finding the buyers is the easy part. And you might as well save that commission. I totally get where you're coming from. But now you're stuck. You're like, okay, well, what's the value of the property? We can help with that part of it. A free value report is something that we offer for our listeners. We use the value report every day in our practice to determine a pretty good idea of what a property is going to appraise for. It's not an appraisal, but you'll find it helpful. It'll certainly reinforce your price if somebody's questioning it. And we just did one this week for sale by owner. She's in Stuart, Florida. Awesome lady. And she was afraid that she had overpriced the house. And when we ran the value report, it was just the contrary. It's just underpriced. So she's now got the ammunition to support her value. So I'm happy to do that for you. But I would be asking them, are you fully approved? I would call the lender. Have they been underwritten? Do they have a DU or LP, automated underwriting approval? These are super important things to know because it tells you how far along the process they are, and they're not just out there looky-looing and they'll figure it out once they get it under contract. You'll know that they're capable of closing. But you know what? Give me a call or shoot me a text off the air and I'll give you some step-by-step ideas on what to ask because we could go very deep on this topic. And I know we're running out of time because I see Jen jumping up and down back there. Uh-oh, I told you so. There goes the music. She's pulling the plug on us. Hey, guys, that means we've wrapped up another week of the Mr. Mortgage Show. Man, oh, man, what an amazing week. You guys have brought some wonderful questions to the show. Thank you so much for that. Hey, if you need us during the week, whether it's reverse mortgage questions, for sale by owner, the rec refi, everything that you need is at MrMortgageRadio.com. All my contact info, links to everything we talk about on the air. MrMortgageRadio.com. That's how you find us when you don't find us here. But guys, have an amazing week. If you need us, you know how to find us. Otherwise, we will be back next week right here. Same bat time, same bat station. Be good. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.